What's going on, everybody? Welcome to the Gray Report. I'm your host, Spencer Gray, and if you are a multifamily investor, you're looking to get into the multifamily investing space, or you're already in the multifamily industry, well, you are in the right spot, because on the Gray Report every single week, we're breaking down exactly what's going on in the multifamily industry, real estate, and the economy, looking at the latest research reports, kind of the new data sets, articles, everything that you need to know to make the absolute best decisions. A lot of interesting stuff on the report today. We've got a lot of new information related to new supply coming online in 2022. We also have a cool study from the United Van Line, seeing where people are moving. Critical piece of information to understand, where to make those allocations, what markets to look at. Let's get into it. All right, everybody, we got Matt Bosnagel, Director of Communications and Marketing here at Gray Capital, back with us like he is every single week. Matt, Happy New Year. First episode of the new year, 2022, after a crazy 21. How's it going? Happy New Year.
It's going pretty well, thanks. Happy New Year to you. I'm excited about this new year. There's a lot of exciting things that are coming up. Really, just in this past week, I keep learning more. People keep doing stuff, so I'm always happy about that.
Learning new stuff is always interesting. What I thought was interesting is about just turning over to the new year is all the conversations about how crappy a year 2021 was, and in many cases, it didn't go the way that we wanted it to. But I think if you're looking at a lot of Americans, and we've talked about this, it's a continuing bifurcation, extending wealth inequality. Mm-hmm. But for folks who were invested in either real estate or the stock market, pretty much anything other than cash and unfortunately gold, you were much wealthier at the start of 2022 than you were in 2021. Now, like we looked at in past episodes of how this market has affected individuals in different places in their life differently, a lot of people are getting the short end of the stick. And that's sucks. It's unfortunate.
Well, and that's one of the things that we've said about an inflationary period in general is it's never even across the board. There's going to be people that have vastly inflated, and then there's other people that are going to be making money off of that. So that is unfortunate. But there is not to say that's another thing. Like, you asked the right person. 2021 was a really good year. So it's very, very strange.
And it's not just real estate. It's across the board. I mean, just everything is more expensive. And if you're allocated those things, took advantage of that, then you're doing pretty well. So a lot of people are looking at, we saw a ton of growth. Mm-hmm. Incredible amount of demand, record demand. Even though we saw a record amount of deliveries in 2021, we saw demand in absorption blow those records out of the water. I mean, like 500,000 units were absorbed in 2021, even though we had, I think, like 400,000 units delivered, something like that.
Well,
usually it's like 300.
It was in the 300s, but it was
usually
insane.
It's in the 300s, but we had 500,000 units of absorption.
Okay.
And so we're looking at 2022, what that pipeline is looking like. A lot of new units are coming online or going to be coming online over the next, 18, 24 months. RealPage had a pretty good interesting piece. 2021 will be a record year for construction. Matt, start just taking us in. What do you think?
So we've talked about the materials and labor shortages here. We've also talked about the compelling reasons why multifamily developers continue to build apartments. There's dramatic rent growth, low supply, and high demand from both renters and investors, which has kind of created an environment where building apartments makes financial sense. I've said a version of this, like I said, a few times before, but since it's a brand new year, I'm going to say it again. In a time when supply chain issues, material shortages, labor shortages have made the headlines week after week, an industry that uses vast amount of all of these, it really depends on it, and an industry that can't exactly work from home, that industry continues to operate and break records this year.
What does? The construction industry?
The construction industry, yes.
I mean, they're sort of operating.
Well,
I mean, like things are being built, but
the fact that these records are being broken, and that's another thing. It's like you see construction continuing. It's like normalcy, but I think that it is a small miracle.
are we talking about the pipeline or deliveries? Because it's a big difference to say I'm going to build it.
Well, the numbers here in this report say that 426,000 units are expected to be delivered, which is record breaking. And I do think that it's a sign of how strong the housing market is, that despite all of these problems, they still continue to find a way to make it work. It's not like, they could make the decision not to build. Sometimes they simply don't have the materials, but a lot of times the materials are just a whole lot more expensive than they were.
Yeah, I think they're getting the materials, but they're either more expensive or there's just delays. And so that's where it's like you're getting it done. But you can get it built eventually, but is it actually going to be in 2022, or is it how much of those expected deliveries are actually going to get stretched out into 2023?
Yeah,
especially because the whole Omicron variant, things aren't it's not exactly speeding things up. Things are for worse, shutting down, and slowing down. But things will finally pick back up when people really enter the workforce. Because that's the hard part is, there's not the labor out there.
Yeah, that's what I was thinking is, especially with the Omicron and there are, the story that seems to be emerging is that it's milder, but still that's another week. Maybe they're gone for a week. That's another delay.
Yeah,
and especially
milder, but if everybody's out,
especially if it's a key position in that project, and then everyone's waiting for that one person to get done. But my whole point for this whole thing was that that the demand is such that this resource intensive industry of development and construction, that same industry is continued to build and is expected to build and break records. It is a small miracle that they're able to do it, but it is also this sign of the enormous demand that we're seeing.
Oh, well, there's blood in the water. If you see price appreciation, 20%, 40% for when we're talking about multifamily assets. So your labor's up, 20%, but if your value's up 40%, you can justify paying more. You can justify paying more for supplies. The difficult part is it's just less certain. We don't exactly know how much more. We know it's going to be more, and so we're speculating on our inputs, but we're also speculating on the valuation at the end of the day. And I think a lot of people are getting things mostly right, but it leads to opportunity for speculation.
Well, and that's what I thought was interesting, because this says that this 426,000 is nearly double the long-term average.
Oh yeah.
And then they're also talking about how, breaks the record from 40 years ago. So we haven't built this much since 40 years. And I can't help but think about that long-term average and why is there this inflection point that you see in that graph of the past several years, when our housing situation is the product really of a confluence of long-term changes and long-term generational trends that did not emerge overnight. Yeah. So I was kind of thinking, why in the past kind of 3 years have we gone up and up and up when it comes to, housing demand and supply? And looking at this visualization from the Census Bureau, kind of highlights one potential reason. You look at and so this measures the building permits in terms of total units, and then you can also look at the multifamily units as well. So that's total residential units. And then if you go down on that, if you click there, you can look at multifamily units as well as the valuations for each of these. And even just looking at for all housing units, you see, however you slice this graph, you see a tangle, kind of, a little bit of variation. And then it's like someone went and pinched that graph.
The 2008.
Yeah, the housing crisis.
Crash, global financial.
And it is interesting. You can see kind of a rough correlation between the valuation and the actual permits that are issued that year. But I think that the trend lines coming down there at the 2009 housing crisis. This is just another illustration of a potential reason, really. So little permits and construction during that time period and really kind of crawling out of it. And this buildup of construction in the last 3 years could, and this is a little bit of a speculation on my part, could be this delayed but growing reaction of a market catching up to the disturbance in the housing market supply from 10 years ago.
What's interesting to me, I don't even see where is Florida.
Florida is I'm
colorblind, so I don't
Florida
know.
is that top spike that you see. Yeah, there you go.
Okay, so I was confusing Florida and California because I was going to say, wait, Texas, that makes sense, but where is Florida? So it's getting back up there. You see California really declining, but I think your point, Matt, makes a lot of sense. I mean, look at this huge gap.
Yeah,
and and the point that RealPage makes, and a point that has been made by other sources, is that we have a lot of supply coming online.
Yeah,
but most of that supply is in just a handful of markets.
Yeah, exactly.
It's in Texas. It's in Florida. It's in Arizona.
Mm-hmm.
It's in a lot of these Sunbelt markets. But then the majority of states are down here because, you've got major capital sources in New York, in California on the East Coast, and everyone's going after the same handful of markets.
Yeah, and that's what's so interesting. You look at that chart. Those same ones that are dominating in terms of housing supply. Those are the same ones you see it peak up so sharply, and then the next year goes down almost just as sharply.
I think it's a good point. Yeah. So this is units constructed, but actually, if you go to valuations, multifamily valuations, just to your point, Matt. You see. So this is Florida. A great example of the crash. There's a lot of growth. There was great population growth in Florida back in 2007, 2008, but you could still build too much.
Yeah.
Now, that looks scary, and look what happened.
And if you highlight on 2006, the valuations for Florida properties are roughly double the valuations for Texas property, and they had about the same amount of permits for that year for 2006. So it's just it also, you can see where the story of a market's going, but you can also see that that valuation and units are not always correlated, and it matters a lot.
You've got it's one side of the coin. You're only looking at the supply side, but not the demand side. And it's the higher you climb, the harder, further you can fall. Not always, for sure. But it's worth paying attention to in markets like Austin or Houston or Atlanta, where you look at the fundamentals and it makes sense with all the population. If everyone is getting that same message, I'm not saying that it will happen, but there's a potential to build too much.
Yeah.
And another thing that I think back to, Matt, of the report that we looked at last week from RealPage and Bricadia, that renter cohort report, breaking down, who are your renters, who actually is making up the population of these properties. The majority of them are not looking for Class A units, which is the only thing that's being built. Those like affluent singles and, some of the, couples and families possibly are looking for, new Class A units, but really looking at 30% of the market are going to be running this new construction.
Good point.
I believe 70% of 70% of the demand with no new supply coming online.
Yeah, that's a really good point. And a lot of the markets that you're looking at that are building all those are high cost of living markets.
Yeah.
And justifiably so. If it's a popular market, it's going to, but building a lot of expensive houses in a lot of expensive markets doesn't really solve an affordability crisis.
There's clearly demand for those units are getting leased up, but we're definitely not making a dent. At least not initially. Over time, accumulation of units, more supply. That does bring down. That does bring down rent. It doesn't bring down rents. It slows the growth of rents, because all of a sudden, if you've got a brand new property that comes online, it's the nicest thing in town. The only thing that's come online recently, you can kind of charge whatever you want. But if you've got 3 of those, you all have to really start competing with each other, and you can't. There's no other competition. You can say, okay, let's get another $50 a month, a year, another $200, $100, $200. There's no other competition. But if you got 2 or 3 more, you're gonna get some pushback.
Yeah.
Okay, IPA report, Matt.
Yeah.
This is kind of the same discussion. Multifamily developers to plug some holes in the housing shortage in 2022.
I thought this was a lovely short report from it's Marcus and Millichap, institutional property advisors. They're kind of associated with each other, and I think this really perfectly echoes the drumbeat I was making about housing construction and housing supply. My favorite quote here, a couple of pull-out quotes. The swell in home buying inflames shortfall is the pull-out quote. And I'll follow that with the subtitle, which is multifamily developers to plug some holes in the housing shortage in 2022. Now, I'm not sure that plugging things up is a solution for inflammation, but but I definitely agree with their message, if not their metaphor. What's particularly interesting here, and I felt a little swell of pride, some admiration here reading it, is how it's not single family construction that's making a meaningful difference in addressing the huge demand for housing in this country. It's the multifamily market.
Oh yeah, but again, multifamily is going to be more affordable, even if they're building luxury assets. But also mentioned in this report is that multifamily developers are just being more efficient in terms of being able to deliver assets.
Yep.
If you think about it, it's economies of scale.
That's it's like the multifamily market has a way to keep things moving, and it definitely is more efficient. Whereas it seems like the single family market is more clogged, with less new homes coming in the market and just less of an interest in moving forward. And there's more you have to deal with a whole lot of different sets of issues rather than just, can I get this online? There is a tangle and almost like kind of a psychological element to home buying, whereas multifamily are really kind of has their eye on the ball a little bit more.
I think it's much more institutionalized.
Yeah.
It makes, again, economies of scale. Just one other paragraph to pull out here, and this is talking about how so much of this supply coming online is being concentrated into just a couple markets. Just to this quote, digging deeper, about 1/4 of those deliveries will be in just 6 markets across the Sun Belt, where rapid in-migration supports the increase in new supply. Dallas-Fort Worth, Phoenix, Austin, Houston, Nashville, and Atlanta are each expected to add more than 10,000 units in 2022. These 6 metros are also projected to add a combined 250,000 new households this year. So 10,000 units sounds like a lot. 250, that's a lot. That's a lot.
And we've talked about this before, how you will have to double or triple or quadruple the amount of new housing that comes online to keep up with the demand that's growing as well.
Well, we've been having a shortfall every year up until I think 2019. 2019 I think was the first year that we kind of hit what we needed to hit. That was after having a deficiency for like basically the whole last decade, like we saw in that census report.
Yeah.
So really pretty incredible. Okay, so Tampa, Zillow has got a new report. Hot housing markets, why Tampa will be 2022's, what are they saying?
It's not all about Tampa, but I do I liked Tampa because I remember earlier in 2021, how I was looking at Tampa, and they've got a great office market. They got a great housing market. Their industrial market's doing well for any kind of real estate, really. Tampa's doing pretty great.
Yeah.
I think another
Tom Brady's there.
Tom Brady, exactly. There are good reasons to go to Tampa.
Yeah, no, I mean Tampa, because a lot of people don't know this. Alex and I lived in Florida for like 6 months, like
cool.
less than a year, in between New York and before we got to Indy. And we thought about moving to Tampa. Because we were living in the Florida Keys, and we were trying to figure out whether we wanted to move to. Not enough was going on in the Keys, and so we think about between Fort Lauderdale and Tampa. And Tampa, it's a much younger population. It's a much cool. It's I don't know. It's a different vibe. It's older. It's much like in general, it's an older city than Fort Lauderdale or Miami and all this southern.
One of the reasons is a couple weekends ago, my friend he's going to vacation there soon. So I was like, I like Tampa. It's got a lot of things going for it. The coolest markets are New York, Milwaukee, San Francisco, Chicago, San Jose. And they say it's characterized.
When you say cool, you mean like ice cold, not
like wear a jacket, not like wear sunglasses.
Exactly.
So these markets are not doing as well, and they say really it's relatively fewer new jobs and demographic trends, like you said. People are at a different moments. I wonder if all this in-migration to Florida could be related to an aging population as well.
Well, Matt,
yeah.
Let's find out. So, United Van Lines had put out their annual report of migration. What's going on? Where are people moving? And most importantly, and most interestingly, I think that they say why people are moving. So, you asked about Florida. Why don't we check this out? We're going to click here. So, primary reasons for moving. So, inbound and outbound. So, you're 100% on the money. 38% of those moving to Florida are moving there for retirement. And then the next larger chunk is lifestyle. And, I guess you could have twisted my arm and I could have told you that.
Yeah.
But getting these numbers is interesting. And I also, though, 26% of people who are leaving are actually leaving for a job.
Yeah.
Not that many people are moving there for a job.
Yeah,
it's
that is the
lifestyle
most,
and retirement. Some people, people are leaving for family. They got family somewhere else. I've been hanging out on the beach too long, and hardly anyone's moving there for the cost.
Yeah, it is.
But not many people are not many people are leaving though because of it's too expensive.
Yeah, and that is actually, and you can taking a look at other ones. You can see the flip side. The factors are not the same across different markets. That's what's really interesting too. The age ranges I think is interesting. You look at the inbound, but also the outbound. 65 and older, 47% of the outbound are, but there are more people moving in.
They're probably moving back from family. Those are probably really old folks.
Yeah.
I'm assuming. And there's cheaper healthcare options maybe back home, or just being close to family is easier. They had the good time at whatever retirement community that they were in, and it's like, all right, it's just they're getting older. One thing I think it's interesting to note and pay attention to is looking at those age breakdowns, because again, thinking back to that RealPage Berkadia report we looked at last week, it's important to understand the prime renting ages. And like for Florida, now I think a lot of people are going to be just renting in Florida because they're moving down there and they're not sure where they want to live. They want the flexibility, but still focused on who is renting. It's typically kind of that 20s through mid 30s. And so again, let's look back at Florida in those age ranges. 18 to 34,
it is not looking
it's
good.
Actually not looking that great. Even 35 to 44, which is you're kind of out of your renting age, not that great. Now, folks 65 and older, baby boomers, retirees, they're also making up a decent chunk of renters. So just because we always like looking at our home state of Indiana, we're positive on the inbounds, just pretty much stable. A lot of those more rural Indiana, a totally different makeup for why people are doing the things that they're doing.
Yeah.
So people are coming to Indiana because of family and for jobs and for costs, but mostly because of their family or they got a good job. There's a lot of jobs, and it's economic reasons.
Yeah.
There are multiple trends in talking about migration today. It's really lifestyle and it's job and family. And if you are someone who's looking for an Indianapolis specifically, people are moving out of Chicago. People are moving out of rural parts of the Midwest to major hubs like Indianapolis, or like Columbus, Ohio. And what I find interesting is the inbound in Indiana. It's actually it's relatively balanced, but we've got a good chunk of people that are moving in. Kind of I guess it's more or less balanced, but that 18 to 34. A good chunk are moving in. Also, they broke down incomes. I thought this was interesting because, you're 150,000 or more, probably not. Certainly, we have renters at our apartments that are making even more than that. But your typical kind of renting income is this, not really zero, really kind of this, it's just sub 50,000, call it 30 or 40,000, all the way up to call it 100. It's really this first three.
Yeah.
And Indiana's got a decent amount of folks moving. More people are moving in this income bracket who are most likely to be renters than they are leaving.
Yeah, and I think that the elevated numbers of people that make more that are moving makes a little bit of sense. I do remember reading a study that said that the higher income people, they can move around more. You're seeing more migration because they have the money to do that.
That was a good report. Yeah. So
looking at the ones that have high outbound is also kind of interesting. Like California, that's the one that you hear about a lot.
Yeah.
And, everyone moving out of California, moving into Texas. But New York and New Jersey have bigger, and Illinois has bigger outbound migration, which I think is particularly interesting, but also just the reasons why they're moving out of here. And the reasons here is for outbound is family, lifestyle, job. Cost is
retirement, really. Retirement and family. I mean, Williams' parents, they're getting ready to move to I think North Carolina. A lot of folks are who wants to pay Illinois taxes, especially if you're in Chicago. A lot of people are moving to Indiana from, like we said, from Chicago. A lot of people are moving down to Indianapolis. A lot of people are leaving because of family, job, lifestyle.
Cost isn't a big thing for Illinois. I think that New York cost was a big one.
I'm sure.
So it's a lot. It's a little bit bigger. I mean, the balance between 2.9% are moving in for cost. 11.7 essentially are moving out because of cost.
The biggest trend here, we've talked about lifestyle. The biggest trend that I'm seeing in general really is it's retirement and family.
Yeah. Family is a bit, and I think it makes sense because you think about what draws people from working from home, and not everyone wants to, as much as I like to imagine, not everyone wants to sit in front of a beach or a mountain. They want to sit in front of their family and work.
Well, exactly, man. I think that the lifestyle is a luxury.
Mm-hmm. Yeah, that's a good point for sure.
People can have different values, but being next to the mountains by the beach, like, who doesn't want that? But it's kind of a luxury.
Yeah.
If you've got an aging parent, or you're aging yourself, being you're not going fishing or going by the beach anyway. You're too old.
Yeah.
So why not be closer to family where it's easy for your family to actually see you and get in touch with you?
Yeah. And there are definitely economic benefits to being around that support structure of having the family.
Exactly. So one thing I just have to mention just before we go any further, Matt, is great place to find all these reports because who's got time to search? So grayreport.com, www.grayreport.com. We're listing all this stuff. It's updated every single day. We're posting all of these research reports as they come available. So go check it out, grayreport.com. But make sure, while you're there, you'd be amiss not to sign up for the Gray Report newsletter. It's delivered to your inbox every Thursday morning at 8:30 Eastern Standard. We're giving you all great updates. All this information, graphs. It's a lot more actually than what we're able to talk about. Everyone that we speak to, Matt, says it's the most important weekly newsletter related to real estate, at least, that they're receiving.
I like doing it.
Yeah. So we'll just keep it up. Okay. What else, man? Is that it on the report?
Yeah, that's pretty much the bulk of what I wanted to cover. I was going to say a little bit about Raleigh and Charlotte as hot housing markets.
Yeah.
But
no news there.
But yeah, that's not exactly.
The viewers of the Gray Report are aware.
Exactly. Yeah, that's a big part of what 2022 is, and my expectations really is really hoping that we get more supply online, and hoping that that some of the and I know this is maybe a fool's hope, but hoping that some of this like fervent competition for properties kind of settles a little bit into something that's more predictable. But
why would that? I would love that, but this year 2022 is going to be crazier in terms of it being competitive.
Really?
Oh yeah. Oh, there. I mean, how many people weren't able to get a deal last year because it was so competitive? I mean, cap rates are, if you are trying to create income, get some yield on your money, where are you going to go?
Yeah.
Where are you going to go? If you're selling multifamily, if you've sold, what are you doing next? Where else are you going to put it?
Yeah.
I mean, maybe the stock market, but probably not. I mean, maybe so. You've got to continue to allocate. If you everyone that had 100,000 in a deal a couple years ago now is 2 or 3. If you had a million, you had a couple million. So you don't need as high of return to produce the same amount of cash. So you can accept lower returns. People can pay more. In multifamily industrial, they are the asset classes that are working that have the most legs. The fundamentals have been never so clearer.
Yeah.
And more folks are trying to allocate to alternative assets, real assets.
Well, and another thing, this was part of the Marcus and Millichap study, was mortgage rates. They were expecting if mortgage rates go up, that could even increase demand among the rental market as people kind of shy away from home buying and go into renting instead.
It makes it because prices will probably stay elevated because people do have more money, wages are increasing, but
there's a lot of
it makes that affordability window. It makes it further away for a lot of people. A lot of people are now all of a sudden renters by necessity rather than by choice. One piece of information I think we should feature, maybe do a full focus on future episodes, is really want to look at wage information and wage growth.
Yeah.
Because we're seeing a lot about wages increasing. The quits rate is high. It keeps setting records of people quitting their job, looking for new jobs. One interesting piece out of that is people are trying to figure out where are these people going.
Mm-hmm.
A lot of people are starting businesses right now. They're not necessarily getting another job and making lateral movements. They're making big movements. They're doing their own thing, or they're making a big step up in their career, which all of that is great. It's also inflationary.
Yeah. That was something that I immediately kind of jumped to, and we talked probably more about inflation really than like housing construction, but that is this lingering question when you talk about wage growth, when you talk about rent growth too, because and we have covered how the rent growth that we've seen last year, a lot of renters aren't yet paying them, but they're going to start to, and once they start to, that is just going to have this knock-on effect and really will swing the whole inflation thing. And rents are both a factor in inflation and are factored by inflation.
Yeah.
And the problem and the same thing with wages is if it creates that feedback loop, then there will be some trouble.
Yeah, I think it's already feeding back. I read an article. I think it was in. We'll post it in the Gray Report. I forget the source. It was essentially describing that this was in Austin, that there have been bidding wars for apartments.
Oh, yeah.
Of people offering to pay $200 more a month just to get a lease signed, because they can't even get. There's nothing available.
Yeah. Well, I mean, and I know the story of New York apartments. You have to get someone to help you find one.
Yeah.
But
it's like buying a house in New York, or it can be.
Yeah.
Or that's how. You have like a broker or
imagine.
agent that will tour you around different properties and.
But then again, like if a bunch of new supply comes on, it does seem like things may come in waves, and you never. Yeah. For certain properties, but 2022 will be another interesting
I'm
year.
just saying, you buckle in.
Exactly.
I mean, with what's going on in the Federal Reserve, is this going to be a soft landing or a hard landing with raising interest rates? Is there tailoring back the purchasing of mortgage-backed securities, U.S. Treasuries? But the people are going to be lining up to buy all kinds of bonds because again, this growing desire and chase for yield. We talked about all these retirees, these people moving because of retirement. They need to support their retirement. They need income. They need cash flow. Where are they going to generate this cash flow from? Mm-hmm. And again, so they're going into bonds. I mean, like we mentioned on previous shows, I mean, junk bonds are yielding hardly anything. Yeah. Real yields are deep into negative territory. Where else are you going to go? And so,
especially if you want something that is less risky, stock market, you can make a killing but if you're a retiree and you want something that's a little more stable,
but
yield,
but if you're looking for yield, I mean, so the S&P 500 dividend is what, like 1 point. I haven't looked at it because I'm just not my focus.
Too high.
But I'm just saying you're still it's negative real yield on the S&P 500.
Yeah,
and now that you can find some decent dividends, all taxable, doesn't have any advantage of real estate. Mm-hmm. again, if I can clip a coupon in a private real estate deal
Yeah.
at 6, 7, 8% cash flow, where else are you going to get that? Again, you can go and stake crypto and get similar yield and look at and I just think that risk return profile, it's so skewed.
Yeah.
So I don't see, and this is for the whole economy, but unless interest rates just get completely spiked.
Yeah, and then that's a whole other.
It's a whole other
issue, too.
conversation. It has nothing to do. You can sit on your hands.
Yeah.
And not do anything, stay in cash. But again, I would argue that maybe is still riskier because if we're seeing interest rates go up, that means we have incredible amount of inflation. This whole rent, that means we're in this wage price spiral, and then you really want to be invested in apartments.
Yeah.
So it's like the worst case scenario. It's like multifamily still may be there to benefit. But if we see an oversupply and interest rates getting spiked and the economy, obviously, like we've talked about in the past, bad economy is bad for everybody, no matter what.
Yeah.
So not hoping.
And I know I'm repeating myself, but this demand and this need for housing, this didn't just come up 3 years ago. This is the result of huge trends, and they are not going away. So yes, 2022 is an exciting year in terms of scrambling to get new housing supply online, but the need would have been there regardless of the pandemic. And so that's something that you can count on.
It's demographic. I mean, that's the thing we're dealing with it's demographics.
Yeah.
And what we've talked about, millennials, Gen Z, and baby boomers. That's, you can't stop that. Now and it's on the margin. So I mean, it's okay. Well, maybe do millennials settle down sooner? Late. Obviously, it's been later. They're going to start settling down, but it's on the margins. And every year that decision is delayed, I don't know how many hundreds of thousands of more renters there are, but it's significant. And then Gen Z, are they ever going to buy a house? They say that they want to. They like the idea, but most don't think that they actually are going to.
Yeah.
And now, it seemed to be unaffordable before the pandemic.
Yeah.
You got to have $50K, $100K or more.
Yeah, that's a good point. If
anything, make a down payment, and so maybe your parents can help you out, but it's tough.
If anything, the pandemic has increased these almost definitely overdetermined things, and that's one of the reasons why 2022 is going to be exciting. Exciting for me. There's a lot of news to report, but
and that's why we do all this, is try to clear through the noise, because there's a lot of noise, a lot of information, and figure out, okay, what do we know? Because we can speculate all day long, what's going to be the hottest housing market, but when we say this is how many people are, this is how old they are, these are the life events that they're going through, this is where they're moving, this is how much we know is being built, this is how much we know is in demand or has been absorbed. You can start making some more empirical decisions and conclusions rather than saying, it's just, I don't know. Everything seems expensive. We've got to be in a bubble.
Yeah.
So this is a great episode of The Great Report. We appreciate you watching on YouTube. These episodes are also going to be available via podcast, wherever you can find podcasts. Make sure that you like this video. Give us a comment. We'd love to know what you think, if this was valuable to you. If you think we missed the mark on anything, let us know. And a subscription. If you subscribe to the Great Capital YouTube channel, then you're going to get updates all the time. And we have a lot of our viewers are subscribers because they're watching each video as it comes out. We really appreciate you. But again, the comment, it helps that YouTube algorithm for us, because we want more people to see the Great Report, more people to get access to this information. And it's a whole other topic, Matt, because there's just not there real estate news and information.
Yeah.
There is 100%. But turn on Bloomberg or CNBC, see how much they talk about real estate. They bring it up every once in a while.
Yeah.
But it's not that common. It's not as... It's because they're selling products. They're selling, public securities.
Yeah.
The best performing asset class in the world in 2021 was U.S. real estate.
Yeah.
Man. You turn on Bloomberg or CNBC, they're not talking about...
We're talking about Roblox.
They're talking about Roblox. They're talking about, cyclicality into value and to growth. And again, because that's what your typical, investment advisor is going to be. It's because those are the products that they can sell.
Yeah. I completely agree. For
it's
sure.
like this is why would we be talking about things we can't even offer you? So keep that in mind, and we want to continue to offer this valuable information, kind of keep us up to date. Again, we start doing this so make sure we could stay up to date. We saw that there was a gap in the market for this type of information in distributing it. That's why we created the newsletter. That's why we created GrayReport.com. That's why we're doing these recaps in the YouTube show. So thanks again. We appreciate you being along the journey with us. And again, do all the stuff, the liking, the subscribing, and the sharing, and the commenting. Very much appreciate it. All right. See you next week.